Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
Hi, it's Rick Durkee, founder of the Coastal Financial Planning Group and the host of Navigating Retirement. And this is our Election 2020 Financial Update. In this video, we're going to spend some time and overview what economic issues may be affected by the results of the election and what things might look like for a second term for President Trump. Number one, infrastructure. Here's some key takeaways. Both Trump and Biden want infrastructure bills, both worth about $1 trillion. Republicans don't want infrastructure spending tied in with or contingent upon coronavirus bills or stimulus packages. Democrats do. On taxes, our key takeaway is Trump wants to extend the 2017 overhaul of the taxes for individuals. In healthcare, key takeaways. Trump budget proposes some more spending cuts to Medicare and Medicaid and proposes a further overhaul of Obamacare with a focus on controlling both care and drug prices. In the area of trade, President Trump has not dialed back China trade war rhetoric. The U.S. trade deficit fell for the first time in 6 years in 2019. In jobs and wages, both candidates want to create jobs through infrastructure investments. Trump will likely continue the Buy American, High American immigration agenda. In the area of climate change has not been prioritized for President Trump. Trump pulled America out of the Paris Climate Agreement and cited other countries as not following through and being held to the same standards or paying their fair share of associated expenses. Now, in student debt, Trump wants to scrap the loan subsidies and forgiveness for public service. Trump also wants to create a single income-driven repayment system. So as a quick review, politics and the economy are certainly intertwined. These are just some of the many factors that contribute to the interplay. Now, looking strictly at the markets, however, the indexes have seemingly been fans of Trump policies. Looking at the combined Dow, S&P, NASDAQ, and the Russell, the indices have registered over 520 all-time record highs since Trump's election. So in closing, politics aside, there are issues that matter in the economy, and this is where things stood under the Trump presidency. So if you're concerned about how the elections may affect your money, stay tuned. Our next video will discuss how Vice President Biden's plans may also affect your money.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.